Everybody, we're excited after like a couple of seconds of technical difficulties, but we're excited to have everybody here. Hopefully everybody hears us loud and clear. I'll give folks maybe 20 seconds to trickle in, and then let's get started. Very excited for the chat today with Dave Wieseneck from DemoStack, VP of Finance there, and founder and CEO of Abacum, Julio Martínez. And I'm going to be hosting your panel, Nick, founder of Rillet.
Hey, good morning, everybody.
Good morning, everyone.
Cool.
Dialing from New York. This is the New York crew.
Yeah, New York City represent. Yeah, no, we're excited to have everybody. Let's get going. Thanks for dialing in. We have a packed agenda for everybody. With a few questions lined up, and then also at the end, would love to get questions from the audience. We have a chat going as well. So if you have questions along the way, we can maybe weave these in as well. We'll start with a quick round of introductions by the panelists here. And maybe we can go around the horn, starting with you, Dave.
Yeah, David Wieseneck, VP of Finance here at DemoStack. I think I got the logo up right behind me. And DemoStack is a software company that helps other software companies demo their software, which is pretty cool and meta. You should check us out. And I'm very much a tech-forward finance professional who leans in on the best tech stack out there.
Awesome. Yeah, we're excited to hear from you today, Dave. Julio, over to you.
Yeah, hello, everyone. Super excited to be here and be trading notes. Julio Martínez, co-founder and CEO of Abacum. We are FP&A software for companies in the mid-market. So we basically empower finance teams to do faster and better forecasting, budgeting, and driving all that scalability into the company. Excited to hear.
Awesome. Yeah, Julio has great insight across many different customers. So we'll be exciting to hear from you. And myself, I'm the moderator today. Excited to be chatting with all of you. Nick, I'm the founder of Rillet. We're building the next generation of NetSuite out of New York City. So hopping into our first question. So as we all know, there has been a meaningful change going from 22 into 23 in terms of environment. I think we've all felt it. And I want to kick it off a little bit as sort of as we head now into 24, which is potentially, again, another shift in environment. What are sort of the things that we have learned? And maybe, Dave, we can start with you. What are things that you have learned in 23 that are specific that you actually want to carry over into 24?
Yeah, I think the biggest learning for me was how much we can do without, in the sense that there was a lot of software, there was a lot of consultants or extra costs that we had on our P&L that obviously through a forcing function of needing to become more capital efficient, needing to run our business at a lower burn rate, forced us to go without. And then how resilient our companies have been in understanding and being able to operate without kind of that excess layer of fat. Now, of course, there's been a lot of companies that have had to do layoffs and cut deeper than just fat. But that's something that I've learned, just how resilient our companies all are in that environment.
Yeah, that makes a lot of sense. Were there specific examples maybe that you can point out where you discovered like that fat that you could trim without actually not a lot of negative repercussions on the organization?
Yeah, there was a lot of software. I don't want to call it any specific like softwares out there, but a lot of go-to-market software that we were able to go without, and a lot of spend on marketing. Where when we took away marketing, we realized that this is specific to DemoStack, but our brand, our mini brand that we had built was actually creating a ton of organic that we were attributing to marketing sources. And so as we trimmed that out, we didn't actually lose as much kind of inbound lead cadence that we were kind of expecting on the initial thought process.
That is a great insight for folks to maybe press a little there in their own organizations. Over to you, Julio. Any sort of key learnings that you've had either running your own company or that you see your customers have in 23?
Yeah, I think something that I definitely learned, but also that we see across our customer base was, this developed bootstrapped mindset. And I think it's similar to what Dave was mentioning, but basically, really trying to spend the dollars that you are generating. And of course, that's not always possible, right? So I know that there are a lot of people in the audience that is venture backed and, might not be there yet. But hey, having that gold standard top of mind and become extremely focused on value and ROI and really prioritizing and, thinking, hey, what would I do if I were bootstrapped, right?
Yeah.
What if I don't have access to that, increase of equity capital? And, that really develops a discipline that, we've seen companies really thriving across our portfolio customer base. I have some thoughts on customer and go-to-market efficiency too, Dave. I hear you, but maybe that for later.
Yeah. And just as we think about kind of like 2023 and what it means for 2024, I think what we're seeing, generally across is that in 2023, we saw every company kind of retrench themselves to efficient growth as opposed to growth at all costs. In 2024, you're seeing that loosen up, right? Companies got down to the core, got down to a place where they felt comfortable, was able to prove out to their investors, their thesis that they were able to retrench. And now they're saying, okay, we have to grow again. So either we're going to grow again and we're going to run out of cash and okay, we're going to, that's going to be the end of the company. And, or we're going to be able to kind of do it on a more profitable growth rate or a more efficient growth rate. And we're going to make ourselves kind of attractive to that next level of investor because investors are starting to put more money in to companies, and you're starting to see that open up, hopefully in the public markets as well. And that will trickle down to the private markets over the course of 2024. So you're seeing that kind of opening up of companies' P&Ls back to more healthy growth than what you saw in 2023, where you saw a retrenchment.
Yeah, that's a great point. And maybe would love to hear from you, Julio, if you have any sort of overarching insights, or if you actually see the same, maybe as a starting point. And if you do, would love to maybe some more context as to which parts you're starting to see a bit more spend, a bit of like loosening up.
What we've seen in our customer base is that hiring is back in motion, right? And people are investing more in the go-to-market function again. Probably as a function of people accessing different sources of capital, right? But also becoming, having retrenched, maybe to your point, Dave, and you also have seen this, maybe retrenching too much. And now, hey, I need to drive this growth. I become, more efficient, and now I'm ready to scale back. However, something that we are seeing as well is that some of the old rules of go-to-market not really holding true anymore. So we see this increased demand in, or expectations in the sales capacity models, right? And that, 80% of reps doing, covering 80% of target, and that used to be sort of an okay-ish assumption. Probably these days we are seeing more and more companies raising those expectations. That's not good enough. It's expensive to build those buffers into your go-to-market function. So we are seeing people more, focus on driving that efficiency and, really increasing quotas, really making sure people are, hitting targets and so on.
Yeah, that makes absolute sense. That's also something we're seeing, and also, for example, I'm preaching very much internally to sort of that bootstrapped mindset, Julio, that you mentioned earlier, is like, I think we should keep a lot of that bootstrap mindset for as many parts of the business as we possibly can. And then, yes, it makes sense in some other areas to start loosening up. But I think that scrappy mindset, it should really be ideally persisted through, even if things start turning a little better now.
Yeah.
Yeah, cool. So I'd love to sort of shift focus a little bit, and something that stuck with me, Dave, from some of our previous interactions that we've had. And you have this phrase of like sort of like the operational CFO. And like there's a discussion that we've had, the three of us, before, around what is an operational CFO? What is it? What does he or she do? Well, so maybe we can actually, sorry, let me rephrase the question. Let me start with you, Julio. Like, how do you define from your seat what an operational CFO is? And then I'd love to hear from you, Dave, how you actually live that and what your take is.
I love the question, of course, and we spoke about it previously. And the operational CFO, we are big believers in this concept, and I think might not apply to every industry. So depending on who in the audience is listening, they might cringe, right? But for B2B SaaS in general, and for many tech-enabled businesses, this is definitely a very powerful profile to have in your management team. And I think that the best representation I know is my co-founder, George, and he's been CFO but also COO in very fast-growing unicorn companies, backed by amazing investors, and he embraces very well this profile. And this profile essentially means a finance leader that truly drives performance and accountability across the business. Right? It's this strategic finance leader that drives a strategy, but also it's very entrenched in business performance. It's very entrenched with the stakeholders in the business, and it's really driving those strategic performance and accountability conversations. So very close to operations, very close to the pulse of the business, right? And look, you might have operations reporting to the CFO, but that's not needed, really, right? So this is not so much about the CFO managing operations like support or success or whatever we want to incorporate there, but being more truly operational in the pulse of the business. And something that we have learned there is that basically you're gonna need, and what we've incorporated at Abacum is, hey, you want to have the data part of it, you want to have the process part of it, and you want to have the team, right? Or the profile. And, it's these three pillars that you need to think about to really empower finance. And data, I think there is a big argument to the first pillar in data of having data reporting to the finance function. We're huge believers of that. Finance needs to be very close to these operational KPIs, and having RevOps, data analytics, reporting into the finance functions, and the finance function is just a best practice. And it depends on every org, right? So, but generally speaking, we've seen a lot of success, and we have many customers that have gravitated towards that. And we see the most successful CFOs, having that set up underneath them. And, this is making them, way more impactful. The same happens with process, right? And the team that you need to assemble.
Yeah. I was actually just going to ask you a clarifying question maybe so I think the team makes sense, probably for some of the listeners. Data, you just clarified. Maybe unpacking process for a second as that sort of middle pillar for the operational CFO. What does that mean in practice for you, or like any tips and tricks tactically for folks?
Nick, you're on the spot, right? It's very tactical, really. So it's very, very tactical. So it's not... Yeah. But don't think of it, right? So the core, or if the most naked part of the CFO work is that investor reporting. But hey, that's not moving the needle much, right? That's ticking the box. So by that I mean, are you embracing an operational cadence that is becoming the heartbeat of the company? Yeah. And that essentially means, hey, what is your slot in the management team meeting? Leadership meeting every week, right? Are you bringing all those insights? Are you bringing in all this data? What's your weekly touch point with every key stakeholder in the company, the CRO, the CMO, like whoever is, calling the shots? Do you have a weekly touch point? Are you well equipped to be impactful in those meetings? Are you presenting them with not only data, but actually a deep understanding of the opportunity in front of you, the risks in front of you? And are you challenging those decisions on a weekly cadence, on a minimum monthly cadence? Of course, an expression of that is rolling forecasts or monthly reforecasting at least. So there are different processes where finance embeds itself as a backbone of this operational cadence.
Awesome. That's fantastic. And I'd love to hear now sort of your side of the table, Dave.
Yeah.
What's your take on all this, and how do you implement some of these wisdom from Julio?
Totally. I think in my experience, I've always been an operationally kind of focused finance leader, right? Finance has many different roles within an organization, and some leaders lean to certain things versus other things. When you think about a strategic finance leader, very much investor relations, strategy work, staying above the clouds, not really getting their hands into the operations of the business. But where we are today in needing to get more out of our current resources, drive efficiencies, it behooves our finance leaders, and I think probably everybody on this call would agree, to kind of dive into the details, make sure they are operationally focused, right? What is the people? What is the process? What is the tech stack that you're building upon? And, really understanding all parts of the business. Part of the thing that makes me successful in my role is I want to understand how everybody does their job, how everybody's function ladders up to the success of the company. It helps me build better financial models. It helps me negotiate better contracts on behalf of the team. It helps me tell the story to our investors. And of course, it helps me build a better financial model, not just of like where we are today, but where we're going and the different levers that we can pull. That helps me then become more strategic when we talk to the leadership team or we talk to investors about what are our risks, what are our opportunities, and what are the different choices that we can make to affect that. That being an operationally focused finance professional helps me do that higher order work. When we think about the hierarchy needs and the pyramid of needs for finance teams, obviously at that bottom is building an amazing transactional workflow so that your transactional, your financial data, your infrastructure is built on really good transactional workflow and the proper data, so that as you move up that pyramid and you move into that strategic finance work, your data and your base layer is solid, so you can do that higher order work. And I think that's what it means to be an operational CFO. And I think right now is a big moment for us to lean into those operational aspects of our skill sets. You're also seeing it in the, I read an article that said that more CEOs in the Fortune 500 are coming from CFO backgrounds. And I think that leads into this idea that people with that finance skill set are stepping into that leadership role, that CEO role, more than in the past. I think it comes from being operationally focused and having that kind of background in their skill set.
Yeah. And I was just on a panel or on a podcast yesterday where folks asked me, sort of like, for maybe younger folks here in the audience that are still building their careers in the earlier cycles, first couple of years, what sort of one piece of advice or recommendation would you have for someone like wanting to pursue a CFO or head of finance type of career? And then one piece of advice I had for them is like, go as operational and deep on systems, the underlying processes, the company that you're at, as you possibly can. Because there's this like weird dichotomy where people want to be strategic early on, but a lot of the value add actually comes from being very in the details in the operations to then be good with strategic advice. So for the younger folks,
I think the best leaders can do two things, and it's hard to do, which is like zooming into the details, but then zooming out to see the full spectrum, and being able to see the forest for the trees. But that zoom in, being able to work with a team and zoom in, find the crux of a problem and solve for it with a team, I think makes you a much better leader. And you won't have that capabilities unless you did it first on an operational perspective or basis early on in your career.
Yeah, that's awesome. Cool. Yeah, let's I'll shift gears a little bit. That's a great note to end this topic on. And go a little bit into one thing that you, Dave, do a lot. You look at where sort of the business is at today and where it's going. Like, very simply put, where are we today? Where is this going through a financial model? And would love to understand that's, I'm sure, a lot of folks' responsibilities in their own jobs day to day. So we'd love to hear a little bit from you on how you do that effectively, especially when it comes to partnering with the rest of the organization.
Yeah, I think I guess the piece of advice I have, or the thing that I always come back to, is like, what are our options, right? Obviously, there's my perspective of what are our options. I try to gather from other people in the room, hey, what do we think the options are? And then understanding okay, here are the options in front of us, and here's what it means. Here's what it's going to mean financially, operationally. Here's kind of where the end result can be. And then for each one, what are the risks we have from achieving this? What are the opportunities if we do achieve or to go above and beyond, this forecast or this budget we have in front of us? I think by doing that exercise and putting it in context, that's where I've been successful. That can come in many different flavors, whether it be a discussion, whether it be a forecast or a budget, whether it become like a memo. There's a lot of different ways you kind of can tell that story, but that's where I've been most successful. I'm trying to think how else, you can operationalize it. But yeah, I think you just have to partner with the business and making sure you understand the different aspects of the business. We can all, on a spreadsheet or in Abacum rather, build out any future, right? With assumptions, layered on top of other assumptions. You can say that the company is going to 10x over the next, 36 months. You can also show that it's going to be flat or that it's going to run out of cash over the next couple of months, right? You can show anything in a financial model. It's just assumptions and math. But I think making sure you translate that into what are the different pieces that need to go into it, what needs to be true for that to come to fruition, this model in front of us, and then what are the risks of achieving that. And I think if you're really clear with the people around the table, then you can make good decisions on where you want to go. And you need to make sure you understand, if this is where we're going, here's what the outcome is. I think the worst thing you can do is put a plan in place where you're like, I think we can go achieve this, but then the outcome of that plan is not going to be attractive to anybody. So yes, being realistic, but you need to make sure that you're putting in a plan that everybody's happy with. If you execute well and you come out on the other side of where you expect, that you are happy with that result as well.
Yeah, awesome. And maybe you, Julio, as I assume the receiver of some of these scenarios when you sit down with your own finance team at Abacum, maybe focusing on the levers that Dave was talking about. Sort of what are maybe some of the key levers that you focus on, or that you'd recommend folks to focus on? And then very importantly, how do you deal with this sort of outcome imagination that Dave talks about, which I think is very important. I'd love to hear both of your takes on these 2 points.
Nick, this is a great question, actually. Look, I think we try to merge their top-down and bottom-up, right? And this is where I think sometimes optimism meets realism, or those type of conversations, right? So you want to make sure you are getting really into the data. So for me, that conversation needs to be very operationally focused in terms of KPIs and what is driving those financials. And look, the key assumptions you were asking me about assumptions and hypotheses. Like, look, we're a B2B SaaS, so it's difficult to get it easier. Like it's those are very simple business models, right? So you know my levers and probably I know yours, hopefully. So directionally, so it's the classic. But I think what matters is, yeah, of course, I will have a top-down assumption. My board will have a top-down assumption or expectation or objectives, and we all feel very optimistic about that, and we want to drive the company towards that. But then, obviously, that needs to be anchored in a very realistic conversation with your team that comes bottom-up with a lot of data that says, hey, dude, like, fine, but then this is the resources I need, or these are my inputs to try to achieve your output, right? I want to triple and triple and triple and double and whatever, right? So I can dream. I want to do the 10x that Dave was mentioning, right? So hey, 18 months, I'm gonna be 10xing. Awesome. Yeah. So then my team is gonna tell me, dude, like this is the plan, bottom up. This makes sense, or it doesn't make sense. And hey, those are the trade-offs. These are the resources that I need to achieve that. We can achieve this that you're asking for with this level of efficiency. So what are my constraints in order to execute on that growth plan? So yeah, I think it's very healthy to have like the optimistic top-down ambition with the more realistic bottom-up conversation on inputs.
Totally.
Awesome.
Yeah.
And also one thing that I want to add there, like it's all numbers, scenarios and stuff, but like just taking a second with your executive team and maybe just sit there and like feel out if these scenarios happen. How does that feel? Like, does that make us feel good? Like, what is the implications? What does this room look like, or like what does the company look like if this happens? And really kind of embracing that state, forward picturing. It can be a really powerful exercise that some more like we're all very rational, right? It can just get lost in the process.
Yeah.
Yeah, cool. Super
Amazing.
and interesting insights. I'd love to move us into a quick fire sort of session to top it up, and then open it up to questions from here.
Cool.
So I've got some questions prepared here. And maybe I'll give the first one to you, Julio. So Dave, you get to think for a little longer. What is the one top prediction that you have for SaaS in 2024? Julio.
I think something that we are definitely seeing in the market is a wave of consolidation. So it's not a secret that SaaS has become very competitive, and actually the business model is somehow questioned, right? In this world where raising the capital was easier back then, and then obviously the cost of launching a business were lower, and then we've seen this massive proliferation of SaaS, and then something that we see across the market. For good or bad, is a wave of consolidation of strategic partnerships, right, or M&A, or as well a private equity comeback, right, as the expectations of lowering interest rates are coming into place. Like we see more and more, potentially transactions, and that's across our customer base, and then of course people we talk to. So yeah, more consolidation. This I think it's unstoppable this year.
Cool. Awesome. So Julio, more consolidation for Julio. How about yourself, Dave?
Yeah. For 2024, I think AI is on everybody's mind. I think AI will have a bigger impact for go-to-market than it will for, let's say, the finance tech stack. I also think that AI is going to have for current SaaS companies that are built on software and bringing AI onto their platform, I think they'll have more success in AI driving efficiencies for company as opposed to being a revenue generator for SaaS companies. So in 2024, 2025, 2026, hopefully we'll see good revenue generation from having AI on your platform. But I don't think you're going to see those gains in 2024. I don't think people are ready to pay additional software costs for AI here in 2024. Until it really proves out a ton of value, I don't think people are ready to pay for it.
That's an awesome prediction. Cool.
Come on, Dave, don't be a boomer.
Exactly. It's a little counter.
We are building AI in the product,
I'm willing to trust you, but I need to verify that it has proven value for me.
Understood.
Cool. Last one here before we go into Q&A. Best piece of advice you were ever given that you wanted to share with other finance leaders. We'll start with you, Dave.
Man, the best piece of advice.
One of the best pieces of advice, if it puts you too much pressure on it, otherwise.
Yeah, I would say listen more than you speak, and give a shit. I think the best piece of advice was like early on, a mentor of mine was like, just care. By caring and giving a crap about your counterparties, about your coworkers, about the work that you're doing, you will be better than 95% of your competitors out there. People that you're going to work with, you're going to be better than 95% at your job. And so give a crap. Yeah.
Love it. Cool. Julio, you?
I love it. For me, I would say is focus on what you control. And I think in current market conditions, and especially in finance roles, oftentimes we get very tempted to spend a lot of time trying to understand the market and market dynamics and competition and this and that and AI and a lot of moving pieces that are shaping or reshaping actually the market. And of course, we need to understand that. But hey, oftentimes the strategy should be easier and the conversation should be more straight and more focused on what we control and executing on those inputs.
Ooh, I like that. I'm going to take that with me. That's good advice.
Cool. Yeah.
What about you, Nick? Wait, flip it back on you. What's the best advice for you have?
It's very similar to what you said. Just care. I think that the spin on it that I'd have is like just work on stuff that you also care about personally. Like it's like try and know yourself basically and what you care about, what you're interested in, and whatnot, and map your sort of career path a little bit against that. It's just everything is so much easier if you love what you do.
Yeah, I got a piece of advice when I was like 5 from my mom. Maybe I was like 10, I don't know. You remember back in grade school, you had to like write your name in the top left-hand corner on everything you turned in. And my mom said, like, if you're going to write your name, you better be proud of what you just wrote on the piece of paper. So if you're going to turn this in, you better be proud of the work that you did. Yeah. That sticks with me. Does it stick with you guys? I don't know if you got the same advice from your parents too, but like, I'm never going to send that email unless I'm not going to put a deck together and send it off. I'm never going to do a memo unless I'm proud of what I wrote and like I can stand behind it. I don't know. What do you guys think?
Dave, I love it. I didn't get that piece of advice exactly, but it definitely resonates. Take pride of what you do, right? And be proud, and that commitment to excellence, right? That commitment to excellence, relentless. Thank you for sharing. That's very cool.
Really nice. Well, yeah, with that, we are maybe opening up for see if there's any questions. So just as a summary, we have had a hopefully a really interesting discussion around sort of that bootstrap mindset that may carry over in some parts of the business into this 24 as well. We spent some time on the operational CFO, what it means to be operational, marrying sort of top down and bottom up well. And then lastly, talked a little bit on the sorry, I'm blanking on the ways to basically run models again with the levers and picturing the outcomes that way. Before sort of wrapping up, wanted to open it for the audience if they had any questions here, and then we can discuss them.
Yeah, let's do questions.
Yeah, I think there came in Q&A. We have a few here already.
That is awesome. Let me try and read them out. All right. Here's first question. How do you balance investing in growth and protecting financial stability achieved through profitability, managing the business in the past? Growth often involves anticipating future. Okay.
Yeah,
so
I mean,
or you got it.
Yeah, I'll take a stab at this. I mean, I think I don't think anything's different today than it's always been, which is what is your business case? What is the opportunity that you want to achieve? And then balancing your resources. At some moments it felt like we had unlimited resources and we can kind of just do everything. And in this moment, you have less resources. And so the question becomes a little bit more clear, and the attention to making those trade-offs become more clear. I don't think anybody has the perfect right answer. It really depends on what do you want to achieve as a company, knowing that you have less resources or scarce resources, and then making your best decision based on kind of different options that you have in front of you. I think it's the classic things that we all learn either at business school or early on in our career, making hard choices. I don't think there's any like perfect answer. And I think just figuring out what your investors want, with your investor perspective, your CEO perspective, and what you think is right for the company to do. You as a leadership team need to look at your different options, understand your risks and opportunities, make hopefully asymmetric bets as a company. But I would assume we're all in venture-backed startups, and it's a venture. You have to take risk in order to see those opportunities, and you want to take asymmetric bets on those risks. But it's always going to be a risk. There's no perfect answer. There's no right way to run a business. That's my perspective. I don't know if I wish there was a magic bullet. If Julio, if you've got one, please show me the way.
no magic bullets. So I can only endorse what you said. Hopefully you can make a more of a hopefully scientific process in decision making through data, scenario analysis. So of course there are some methodologies that hopefully allow you to have a more structured thinking process, but I'm assuming, hopefully we all do that already. And the reality is that the future is very uncertain, and there is no crystal ball.
Yeah, and I also do think you can never wait until you have perfect data, right? You should gather data. You should take a good time to an appropriate amount of time to gather data and look at your choices and evaluate them. But you never want to wait too long to make a decision. Decision paralysis is making a decision. It's a decision not to do anything or to stay with the status quo. And also, you're never going to have perfect data. You're never going to, the right answer is never going to just show itself through the data and be like, I found it. Here we go. You have to balance also making a decision quickly, moving swiftly, taking advantage of the moment as well. Nick, what do you got?
No, I think piggybacking off that, there's another question actually in the channel that kind of links to that a little bit by Kevin. And thank you, Kevin, for staying up. It's late in Indonesia, so really appreciate that. He wants to know a little bit so against what you guys just said in terms of the uncertainty that comes with things and so forth. There's a question around often there's a ton amount of pressure, I don't know, burn, there's a ton of constraints. How do you influence the strategic direction in the company when you maybe also have a strong-willed CEO, or I'm not sure what Kevin's context is exactly, but maybe very tactically against an uncertain future with maybe high constraints today, how do you advise head of finance at such a company to navigate interpersonal or strategic process-wise in an organization to get their view heard and influenced?
Yeah, I'll explain what I do tactically.
Right.
I literally write out the future, right? So I will write out a memo with here's 5 ways the future can bear out, right? Here's the most optimistic view. Here's the most pessimistic view. And here are the kind of a few flavors in between. And I like to say okay, let's assume we do X, Y, and Z, and this is where we are a year from now, 2 years from now, right? Here are some assumptions that get me there on a top line result. Here's what it means to the business. Here are the risks that we're going to see along that. And here are the opportunities, of course, which is that end result on an optimistic point of view. And if we miss, here's what it also looks like. Here's another view. If we go for it, if we go for this risky choice, here's what it looks like if we miss. Here's a different scenario of, let's say, smaller growth. But here are the risks if we miss on that. And that gives, I think, the people around the table, your CEO, your investors, a chance to opine on what their risk appetite is. And I think that really helps you as well to figure out okay, their risk appetite is high. We're going to go for these risky things. I've already voiced my opinion, but I'm going to go all in to help now the company be successful. Don't keep it to yourself. If you have objections, if you feel strongly on a different, explain yourself, bring it up, help your CEO understand, help your investors understand maybe your perspective, see around the corner from things that you're seeing from your point of view. But once you make a decision, go all in together on that decision and execute. So that's how I do it tactically.
That is, I think, a beautiful way to wrap things up. Sort of stick together. There's one just a very last minute question. Maybe we can just share. Maybe we keep it short, just in the interest of time, but still address it. How would you suggest finance professional approach valuation 24? Tech solution versus sale versus investing more in product growth. Okay, yeah. So the general topic on valuations, and obviously high watermarks from previous rounds, and how do you, so how do you, very tactically, how do you think about investing into sort of the future, basically investing in more product for growth versus kind of eyeing on a sale maybe of the company?
I think it's a quite.
Go ahead.
Dave, go ahead.
It's hard because it's really hard to do both at once. It's really hard to have an eye on a sale, your roadmap, what you invest in the short term gets dictated if you're kind of angling for a sale or an acquisition, depending on the type of acquisition that you're angling for as well, versus going all in on growth. You only have so many resources. Your time as a CFO, as a CEO, can be distracted, right? Raising capital versus positioning yourself for a sale and kind of doing those activities. It can be very distracting to do both. So I think you almost need to kind of pick what your future is and make a decision as early as possible and go for that. Otherwise, you're going to be very distracted from trying to do multiple things as a leadership team.
With that, Julio, any final points on that one from you?
Yeah, on the valuation side of things, I would argue, and we've seen, in reality, management teams actually keeping optionality open, right? And actually engaging in different avenues of strategic conversations. So ideally, I would do what they've said. So you choose and pick your battle and really focus your resources on either, hey, delivering the growth we need to raise, or break even and becoming sustainable, like whatever, right? So that standalone opportunity versus engaging in a trade sale or merger opportunity. What we've seen is, successfully people engaging in both, because that increases your optionality, right? And this is companies either exploring a strategic sale, and of course that will always give you a premium. It's less financial driven, and then hopefully you have synergies that will maximize your valuation, right? And it's hard work, right? And usually it's bigger players, so very slow processes. On the other side, private equities, very much a financially driven valuation with compressed multiples driven by public markets, right? So like it's not we don't see we don't see that the best route these days, but definitely there is opportunity there if you have a very healthy P&L, and those processes usually are faster, right? And that can be a good opportunity. So
yeah, I think it also depends on size of your company, kind of where you are. If you're a Series seed company that has some initial traction with a really attractive piece of software, you may be a very attractive acquisition target, and not be able to raise capital. And take that kind of local, Jason Lemkin coined this, the local maximum into play, which is if you raise additional capital, you may actually be 5 more years before you're an attractive acquisition target. So understanding kind of where you are in your life stage is going to dictate kind of where your highest possible valuation is going to be from either like an acquisition, raising capital from VC, from PE. Different appetites on risk, where they invest, are going to dictate kind of where you need to focus your efforts. Awesome. And waiting 6 months, the market may be totally different in 6 months. If the IPO market eases up, valuations might start to climb again, and you may be in a great position to either raise or get acquired at a higher valuation. So time scale also matters a lot right now.
Timing is a lot in life. Yep. Cool. That has been a great session. Thank you everybody for joining. If you want to stay in touch, feel free to chat to Dave Wieseneck, Julio Martínez, or myself on LinkedIn. Yeah, appreciate everybody's time. Hope you learned something.
Thank you very much, everyone. It was a blast. Bye. Thank you.